Hello viewers, so welcome to my channel. I'm Hasham Ali Khan. This is the last video on problems on accounting standards. In this video, one problem I'm going to explain on AS7 construction contracts and 6 problems I'm going to explain on AS9 revenue recognition. So this marks the end of all the problems on accounting standards from 2 to 9. So hope my regular viewers have already watched the earlier videos. If you have not watched, I suggest you go to the playlist of my channel, select the subject accounting standards, watch the initial videos, be perfect about the provisions of accounting standard, then only you should come to the problems. Otherwise it will be difficult for you to understand. So before starting the problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So always keep it ready. Take the screenshot of the solution of these few problems, then I'll explain all the points in detail. Now, see the 26th problem. This problem is based on AS7. An amount of rupees 9,90,000 was incurred on a contract work up to 31st March 2010. So 9,90,000 cost incurred on construction contract. Certificates have been received to the date to the value of 12 lakh, against which 10,80,000 has been received in cash. The cost of work done but not certified amounted to 22,500. It is estimated that by spending an additional amount of 60,000, including provision for contingencies, the work can be completed in all respects in another 2 months. The agreed contract price of work in all respects in another 2 months. The agreed contract price of the work is rupees 12,50,000. Compute a conservative estimate of the profit to be taken to profit and loss account as per AS7. So here the contract is almost completed. The contractor reliably can find out how much cost to be incurred in the next 2 months. So what is the conservative amount of profit to be taken to profit and loss account as per AS7? So according to AS7, first of all, we have to find out the estimated profit. How to find? From the contract price, subtract the total cost. Total cost consists of cost which is already incurred and the cost to be incurred. So here, total cost incurred till 31st March 2010 is 9,90,000. Additional cost is 60,000. The total cost comes to 10,50,000. The contract price is 12,50,000. So 1250 minus 1050, 2 lakh rupees is the estimated profit. Now find out the percentage of completion of work. 9,90,000 rupees are spent on a total cost of 10,50,000. So 9,50,000 by 10,50,000 into 100, 94.29% work is completed. Right? Now, computation of estimated profit to be taken to profit and loss account. Finally, it is asking you how much percentage of profit to be taken to profit and loss account. The estimated profit into cost incurred minus total cost of the contract. The estimated profit we got 2 lakh rupees. Then cost incurred is 9,90,000, whereas total cost is 10,50,000. So you will get 1,88,571. 1,88,571 is the conservative amount of profit to be taken to profit and loss account for the year ended 31st March 2010. So according to para 21, here I have explained you about the provisions of AS7 regarding the recognition of the amount to be taken to P&L account. According to para 21 of the AS7 construction contract, when the outcome of the construction contract can be ascertained, can be calculated reliably. So what the AS7 says, if the outcome of the construction contract can be reliably made, the contractor is reliable in calculating the cost and revenue, then can be estimated reliable contract revenue and contract cost associated with the construction. Contract revenue and contract cost associated with the construction contract should be recognized as a revenue and expenses respectively by reference to the stage of completion of contract activity at the reporting date. At the end of the year, it is suggesting, the AS7 is suggesting we have to find out the percentage of work completed on the reporting date. Reporting date is 31st March. So as on 31st March, how much percentage of work has been done? So we got 94.29% work is done. So we recognize the revenue and cost for the current year up to 94.29%. That is the provision given under para 21 of AS7. Thus the estimated profit amounting to 1,88,571 should be recognized as revenue in the statement of profit and loss. So at the end of the year 31st March 2010, the profit to be taken to profit and loss account is 1,88,571. This is according to AS7. That's it. Now we'll start the problems on AS9, revenue recognition. 29th problem. SMT Enterprises, Messrs. C. 27th problem. Problem number 27. Messrs. C Limited, SEA Limited, recognized rupees 5 lakh on accrual basis income from dividend during the year 2010-2011. So this company C Limited recognized 5 lakh rupees on accrual basis income from dividend during the current year 2010-11 on shares of the face value of 25 lakh held by it in Rock Limited. That means C Limited is holding the shares of Rock Limited. The investment price is 25 lakh. On this 25 lakh rupees, 5 lakh rupees dividend. As at 31st March, Rock Limited proposed a dividend at 20% on 10th April 2011. However, dividend was declared on 30th June 2011. Please state with reference to relevant accounting standard whether the treatment accorded by C Limited is in order. No, the treatment accorded by C Limited is not in order. It is against AS9. AS9 says when the revenue is earned, when the receiver of dividend has the right to receive as on the last date of the financial year, then only it will be recognized. As on the balance sheet date 31st March 2011, C Limited does not has the right to return the dividend. They are going to receive the dividend in the next year because the Rock Limited has declared the dividend, proposed the dividend on 10th April, and the directors have declared the dividend on 30th June 2011. That means April and June are following after 31st March. So as on 31st March, there is no declaration of dividend, there is no proposed dividend. So C Limited recognized that 5 lakh rupees dividend as current year's income is wrong. The declaration of dividend, the recognition of dividend is not correct. Now here, this problem is based on AS9 on revenue recognition. Dividends from investment in shares should be recognized as revenue when the owner is having the right to receive the payment is established. When the owner of the shares are having the right to receive, then only it should be recognized. 31st March, C Limited does not have the right to receive. They will receive from Rock Limited only when they declare. The Rock Limited declared the dividend, proposed dividend in April, and directors have declared the dividend in June. So they don't have the right to get the dividend on 31st March 2011. In the present case, the right to receive dividend did not exist on the balance sheet date. Then Messrs. C Limited should not recognize the dividend for the year ended 31st March 2011. So C Limited's treatment is wrong. They cannot treat that as a revenue as on 31st March 2011 because they didn't get the right to receive. So since the dividend were proposed and declared only during that financial year, that means next financial year it should be recognized. Thus, the treatment adopted by the company is not in accordance with AS 9. That is the explanation of 27th problem. 28. Gear Limited is engaged in manufacturing and supply of gearboxes to Indian Automobile Limited. So Gear Limited is supplying some gearboxes to Indian Automobile Limited. As per the terms of supply, full price of goods are not realized by Indian Automobiles, but 10% thereof is retained and paid after 1 year. There's an agreement that Gear Limited will supply the goods to Indian Automobiles, and Indian Automobiles will not make the full payment. They will make only 90% payment. 10% thereof is retained and paid after 1 year if there is satisfactory performance of the parts supplied. Gear Limited accounts only 90% of the invoice value as sale at the time of supply, and balance 10% is accounted as sale in the year of receipt of payment. So Gear Limited is accounting 90% of goods supplied as revenue, and 10% of the payment will be recognized in the next year. Is it correct or not according to AS 9? That is the problem. So now AS 9 says the revenue should be recognized when the ownership is transferred from the seller to the buyer, irrespective whether full amount is received or not. If the owner has transferred the significant risk and return to the buyer, then the revenue should be recognized. So here Gear Limited's contention that we will account only 90% is wrong. 100% should be recognized by Gear Limited. So as per AS 9 revenue recognition, revenue from sale of goods should be recognized when the seller has transferred to the buyer the property in the goods for a price. When the seller has transferred the property or ownership of goods to the buyer for a price, and when the seller has transferred all significant risk and reward, and seller has no effective control over the goods, and no significant uncertainty exists regarding the amount of consideration and its collectibility. So what the AS 9 says, that is completely explained here. That means the revenue should be recognized when the ownership is transferred for a price. And the significant risk and reward of the goods are completely transferred from the seller to the buyer. Then irrespective uncertainty exists regarding the amount of consideration. Then in the present case, the goods as well as the risk and ownership has been transferred by Gear Limited. In the present problem, the Gear Limited has completely transferred the risk and reward to Indian Automobiles. Then to Indian Automobile on the basis of invoice and delivery of material. Hence, Gear Limited should recognize the sale at 100% of the invoice value, in spite of the fact that 10% payment will be realized after 1 year. In spite of the fact that 10% will be realized after 1 year, 100% complete sale should be recognized by Gear Limited. However, depending upon the past experience regarding the collectibility of 10% amount should be made a provision for the amount that is not likely to be realized. According to past experience, Gear Limited has to see whether they can be able to completely recover the 10% or not. If in the past there is irrecoverability of the 10%, then a provision for doubtful debts should be made. But regarding the invoice, 100% invoice should be recognized as revenue during the current year. That is the provision. Next. 29th problem. SMT Enterprises entered into a contract for sale of goods worth 24 lakh with ST Limited. So SMT Limited is selling, seller is SMT, buyer is ST Limited. So they entered into a contract for supplying 24 lakh rupees worth of goods. The goods were inspected, approved and finalized by the inspection team of ST Limited. Made the whole payment of 24 lakhs. However, it requested SMT Enterprises to dispatch the goods in 6 equal monthly installments from October 2005 to March 2006. The payment is made by the buyer, but buyer has requested the seller to dispatch the goods in monthly installments, in 6 installments beginning from October. So October, November, December, January, February, March. In this 6 months, dispatch of goods that is requested by the buyer. But agreement for the whole goods are already made. Payment for the whole good is also already made. Then, in the month of January 2006, due to national calamity, ST Limited Enterprises stops the dispatches of the remaining 3 installments until further notice. At the same time, finalizing its accounts for the financial year 2005-2006. SMT Enterprises booked sales amounted to 12 lakh and showed remaining 12 lakh as advance against sales. Actually, the SMT Limited has to supply monthly goods October, November, December, January, February. They have supplied October, November, December. But during January, some national calamity comes in. That's why SMT Limited unable to supply the goods. So now the year end, 31st March. On 31st March, how much sales should be accounted by SMT Limited? SMT Limited has treated 3 months sales, 3 installment sales, that is half. 24 lakh, half, 12 lakh. The SMT Limited have treated 12 lakh rupees as sale revenue and remaining 12 lakh rupees as advance received from the buyer. That is a treatment given by SMT Limited. But according to the provisions of AS9, complete 24 lakh rupees should be recognized as revenue by SMT Limited. SMT Enterprise should recognize the entire amount of 24 lakh as revenue for the year 2005-2006. Here the property and the goods have been transferred at an agreed price. Already agreement is made. Property is transferred. Only on the request of buyer, the goods should be dispatched in installments. Further, all significant risk and rewards have also been transferred. The sale has been successfully completed upon the receipt of the entire payment. The payment has been received. The sale transaction is completed. Now, SMT was required to dispatch the goods for 6 months out of its inventory. It's only on the delivery which has been postponed at the best of the buyer. On the request of buyer, the delivery is postponed, but the amount is received. The goods, the ownership has been transferred from the seller to the buyer. Mere postponement of delivery at buyer's request doesn't alter the period in which revenue should be recognized. Simply, on the request of the buyer, the goods should not be delivered in one lump sum. It should be delivered in installment. Does not de-recognize the revenue of the supplier. Now, thus the treatment adopted by SMT Limited is not correct. Corrective entry should be passed so as to recognize the entire amount of 24 lakh. So SMT Limited should pass a corrective entry and recognize the whole 24 lakh rupees as the revenue of the year. And if this is not done, then the auditor has to qualify. Because they are not following the AS9, so auditor has the right to qualify the report if the company has not made the corrective entry. That's it. Now, problem number 30. Y Limited used certain resources of X Limited. In return, X Limited receives 10 lakh rupees and 15 lakh rupees as interest and royalty respectively from Y Limited during the year 2007-2008. State on what basis X Limited should recognize the revenue as per AS9. So here X Limited is giving some resources to Y Limited. Y Limited is paying interest and royalty. 10 lakh rupees interest and 15 lakh rupees royalty to Y Limited. To X Limited. Y Limited is using the resources and paying to X Limited. What is the treatment of revenue recognition for interest and royalty? So AS9 says interest should be recognized in proportion to time basis, whereas royalty should be recognized on the basis of accrual as per the agreement. That's it. This is the provision given by AS9. Interest should be recognized on time proportion basis and royalty should be recognized on accrual according to agreement. That's it. Now 31. Shiva Publications sells books to Venu distributors at a discount of 30% on MRP. with the agreement that if net sales, MRP minus discount for the period ending 31st March 2018 exceed 10 lakh, they will get an additional 5% discount. Shiva publication follow calendar year, January-December as their accounting year. On 31st December 2017, sales to Venu distributor is 9 lakh. Should Shiva publication recognize the additional discount? Now see here, Shiva publication is following financial year 31st March, whereas Venu distributor is following calendar year from January to December. So whatever books supplied by Shiva publication to Venu distributor, Shiva publication offers 30% discount. If the distributor sells more than 10 lakh, then 5% additional discount will be given by Shiva publications. Now, up to December, when the accounts are closed by Venu distributors, the total sales are 9 lakh only, below 10 lakh. But they are closing the accounts on 31st December. But Shiva publication closes the accounts on 31st March. Now, these 3 months sales not conducted by Venu distributor. Now, should we account the discount for this 3 month? Now, AS9 has given the provision. Assuming that there is no seasonality in sales, that means assuming sales are constant, 9 months, 9 lakh. So, for 12 months, it is 12 lakh. So, assuming there is no unseasonality in sales to Venu distributor are likely to be in the range of 12 lakh for 12 months. So, assuming that there are no seasonal sales are uniform, then 12 lakh rupees will be the annual sales for Venu distributors ending 31st March 2018. This is in excess of the target of 10 lakh rupees. 12 lakh rupees is excess of 10 lakh. Thus, Venu distributor will be eligible for additional discount of 5%. Because the sales of Venu distributors are more than 10 lakh, so they are eligible for additional discount. Publisher. Hence, publications must account for a retrospective discount of 5% on 9 lakh. So, this publications, Shiva publications should make a provision of discount of 5% on 9 lakh. So 5% of 9 lakh comes to 45,000. So 9 lakh minus 45,000, 8 lakh 55,000 should be the recognized revenue to Shiva publication. So Shiva publication should account the sales revenue as 8 lakh 55 after deducting 45,000 probable discount to be given to Venu distributors. Now last and final question 32. V Limited purchased goods on credit from L Limited worth 250 crores for exports. The export order was cancelled. V Limited decided to sell the goods in local market at a discount. So V Limited requested L Limited to offer a price discount of 15%. The chief accountant of L Limited wants to adjust the sales figure to the extent of discount being allowed to V Limited. Is this treatment justified? Yes. L Limited treatment is justified. V Limited is purchasing the goods from L Limited to export. All of a sudden, exports cannot be done. So, V Limited decided to sell the goods in local market at a discount of 15%. So, it is requesting L Limited to provide the discount. So, L Limited has deducted the trade discount from invoice price, and that is the correct treatment. The trade discount will be deducted from invoice price. So, L Limited has done correctly by deducting the trade discount from invoice. So, as per AS9, trade discount given should be deducted in determining the revenue earned. Thus, the chief accountant of L Limited is correct in adjusting the sales to the extent of discount of 15%. That's it. So, totally 32 problems I have explained for accounting standard 2 to accounting standard 9. Hope you have followed, you have understood all the provisions of this accounting standard from 2 to 9. So if you are satisfied, give a like to the video, share my video in your groups, in your friend circle, so that more students can watch the video and enhance the knowledge. Inshallah, next video we will start the next accounting standard.